For a theme that kicked off with a sense of ennui, the upcoming U.S. presidential election is now starting to resemble a gripping Netflix drama. Plot has a presidential nominee facing possible jail time, and another unexpectedly bowing out of the race after a botched debate and concerns over cognitive decline. The narrative gets tangier when a dramatic assassination attempt is added to the mix and a vice president makes a wildcard entry. Even as Kamala Harris braces for the tough fight, the all-important question looms. Is America ready to vote in its first woman president? If the candidate were Michelle Obama, the response would be an overwhelming yes. Since it is not, the outcome is still in flux. As investors keep pace with the shifting dynamics of the election, it would be good to understand how these developments may impact the stock market and which sectors or stocks would benefit as the election campaign heats up. Which president is better for stocks, Democrat or Republican? Investment themes around this election have been lackluster at best. Interestingly, this concurs with historical trends demonstrating that market returns are not highly correlated with election outcomes in the mid to long term. Yet another conclusion derived from past data shows that a Democrat president is better for investors. This study looked at 70 years of returns and found that $1,000 invested only when a Democrat sits in the Oval Office returns $62,000 versus $27,000 for a Republican president based on the same strategy. Market experts have waxed prolific on which stocks might be key beneficiaries if either party's candidate were to take the crown. Taking a page from the past again, when Trump won the 2016 elections, his trade policies with China led to doomsday predictions for companies having a large Chinese exposure, particularly Apple. However, the Apple stock did more than fine, and it doubled during Trump's presidency and went on to make more spectacular gains in the ensuing years. The same can be said of Biden's radical anti-fossil fuel policies and the estimated detrimental impact on energy companies. The energy sector debunked all negative predictions and is the best-performing U.S. sector since Biden's inauguration in 2021. Sectors positioned to benefit from a Republican win. Cryptocurrency stocks after Trump's promise to make the United States the crypto capital of the planet and Bitcoin's superpower of the world. And of course, Trump-related stocks like Trump Media and Technology, in which he is a majority stake owner, software company Funware and video-sharing platform Rumble. U.S. prison operators based on Trump's witch hunt policies on illegal immigration. Health insurers given Trump's previous accomplishments with Medicare Advantage programs. Sectors positioned to benefit from a Democrat win. Assuming Kamala Harris does not deviate much from Biden's policies, clean energy and related stocks will continue to win. This includes shares of the solar sector, power generation utilities using clean energy, electric vehicles, infrastructure providers for the renewable energy industry, waste management, and recycling companies. These sectors would benefit no matter who wins the 2024 elections. Semiconductor sector, as both parties like their silicon homegrown. Automakers, steel producers, and agricultural equipment makers could benefit from tariffs on Chinese imports because if there is something the two parties agree on, it is the trade war with China. Why United Health UNH? Health insurer United Health UNH is touted as a Trump win beneficiary, but the stock has fared quite well independently, benefiting long-term investors with consistent returns of nearly 600% in the last decade. A recent Q2 earnings report infused investor optimism, pushing the stock into a new 52-week intraday high of $581.50. Currently, the stock is trading around $565 levels. Should you buy United Health UNH ahead of the elections? United Health UNH receding headwinds, consistent growth create opportunity. But navigating a tougher Medicare Advantage landscape. Higher than estimated patient utilization of Medicare Advantage MA in 2024 has raised concerns of managed care organizations MCOs mispricing 2024 MA bids, leading to margin contraction. That aside, reductions in MA reimbursements are adding to the woes of MCOs. UNH's medical care ratio, a measure of medical costs, was elevated at 85.1% for Q2 and expected to be around 84% for Q3. UNH said it has followed a balanced approach for its recently filed MA bid for 2025 and would continue to prioritize balanced and durable performance over transitory market share gains. 2 Medicaid membership levels are expected to stabilize heading into the second half of the year. 3 UNH is on track to approach 5 million patients in value-based care via its Optum business by the end of this year. 4 Cyber attack impact fading. United Health is recovering from the impact of a major cyber attack in February at its Change Healthcare unit that disrupted payments to doctors and healthcare facilities and compromised the private data of a third of Americans. United Health is providing over $9 billion in interest-free loans and advance payments to care providers to alleviate the impact of the breach. This should help with client retention, but also raise UNH's cyber impact bill to a higher-than-expected $1.90 to $2.05 per share for 2024 versus prior expectations of $1.15 to $1.35 per share. But it's reassuring to see UNH prioritizing its reputation over financial loss to support its clients. 5 Reaffirmation of growth targets. Despite these business disruptions, UNH is staying the course on its 2024 adjusted EPS target of $27.50 to $28 versus $25.12 in 2023 and reaffirms its long-term earnings growth goals of 13% to 16%. UNH expects to be in growth mode for 2025 by adding plan partners and geographies. 6 Consistent earnings and revenue growth. The company has topped earnings estimates and grown EPS year-on-year since the third quarter of 2021. Its revenue beats are more modest though, less than 2% in the past 4 quarters. 7 Strong shareholder alignment. Despite diverting resources into care provider support initiatives, UNH still expects to achieve its full-year share buyback objective. Last month, UNH increased its quarterly dividend by 12% to $2.10, marking the 15th consecutive year of double-digit dividend increases. UNH's 5-year dividend growth rate is 15%. Risks include typically everything in the health insurer space. United Health stock valuation. UNH stock trades at a 1-year forward price-to-earnings ratio (PE) of approximately 18x based on an EPS consensus estimate of $31 for 2025. A re-rating of the PE multiple to its historical 5-year average of 20.3x represents 11% upside from current stock price levels. Bottom line, the U.S. election campaign has kicked off in earnest. However, the outcome is not likely to have any mid- to long-term impact on the stock market if history is any guide. UNH is expected to benefit from a Trump win in the election, but I believe the stock is a consistent performer that can do well independently, regardless of who gets to sit in the Oval Office. The stock is a long-term buy. No need to make it election-specific. Disclosure: I do not own any shares mentioned in the video, but I may or may not initiate a position in the next 72 hours. Cautionary statement. Please note that I am not a registered investment advisor and readers should do their own due diligence before investing in this or any other stock. I am not responsible for the investment decisions made by individuals after watching this video or reading this transcript. Readers are asked not to rely on the opinions and analysis expressed in the video and encouraged to do their own research before investing.